What do I need life insurance for at this age? Are you kidding me? I'm done working. Life insurance, estate planning? That's right. In estate planning, life insurance can be one of the most powerful tools in managing your income taxes, in you being able to get benefits while you're alive as you make the transition of having any type of challenges physically or neurologically. You're able to get those benefits through very specific types of life insurance products. I'm going to talk about one. It's called corporate design life insurance. As retirees age, when you're forced to take out required minimum distributions out of your IRA, you don't need the money, you must pay the taxes on it. Where do you put it if you don't need it, so that you're able to get the highest tax advantage for yourself, for your spouse, and for your heirs? You can utilize a certain type of life insurance for your benefit. So if you ever have any type of need for even in-home care where you're not able to do 2 activities of daily living, and I'm going to go through what those 2 activities of daily living are: bathing, dressing, taking medications, meal prep, toileting, and transferring. Basically, if you were going to go someplace, all the things that would be required for you to get up, clean yourself, get ready, have a meal, and get there. If you're not able to do 2 activities of daily living because of some neurological or physical challenge that you have, you're able to get tax-free benefits. Another attribute of life insurance is when you're passing your stuff on to your spouse or to the next generation, avoiding or managing income taxes. Because life insurance is tax-free, anything that goes through that mechanism is going to be able to come out completely tax-free. So if you have a large estate or a farm or different things that would be difficult, a business that would be difficult to liquidate, you use life insurance to be able to pass those assets on to the next generation. Anything that you have extra in a category that I would call discretionary assets, life insurance is something that at the very minimum you should consider. And when you're even thinking about that, if you haven't had any major things happen in the last 5 to 10 years, you're likely a candidate for life insurance. Major things. It's changed so much over the course of the years. Today, in estate planning, life insurance is used for managing income taxes, transferring assets, and most importantly to you, giving you benefits while you're alive so you're able to do the things that you want to do, have assistance in your home, money tax-free that you're able to use at your... I feel like I sound like an infomercial, but I am excited about it because so many financial professionals don't understand it, they don't know how to use it, they don't know how to apply it, and that's why we made this video, so you know to be asking a question. You can call us, you can ask us. It is something that we do specialize in, and we can tell you quickly if you're a candidate for it and if it might even be a good idea, or if we would say, well, you got this and you got this, and with your state, you know, probably not. It's a good idea, but for you, I don't know that would be as good of a choice. I think we might recommend maybe doing this, or just keep doing what you're doing. Give us a call, ask us, watch other videos, whatever you want to do. We're here for you. The life insurance talk here is just to make you aware of some things that, I mean, really, there's very few people that are aware of it. What about life insurance with estate planning?
Life insurance is important in estate planning and is used frequently to leverage your estate to leave more to your heirs in a more tax-efficient way and in a more protected way.
Does it cost you like on a monthly basis or an annual basis to be able to do that? Or how do you pay for it?
No, if you're doing an estate plan and coordinating your life insurance with it, there's not going to be ongoing fees. It's just going to be part of the one-time estate planning fee.
Are there ways to use life insurance and be able to control how it's distributed after you pass away?
Yes. One, you can make your living trust the beneficiary of the life insurance, and you can put in the trust that it would go to, your children or your grandchildren over time. For like grandchildren, you could specify that it's used for their education and even put incentives in if they go to college and graduate about when they should, that they would receive some of the funds at that point. So there's lots of ways life insurance can be used to help your family after you're gone from everything you saved and worked for during your life.
What's another reason you could use life insurance for passing on assets?
Well, one of the things that we need to think about with life insurance is a lot of my clients who are in their 50s, 60s, or 70s have a pension, and their adult children are not going to have a pension. Even though they've worked hard and they've been smart and gone to college, just a lot of companies are not offering pensions anymore. So, and we also have to be concerned about what's going to happen with Social Security. So this may not be a concern for you, but it may be a concern for your middle-aged child or your child who's going to be middle-aged or elderly 10, 20, 30, 40 years from now. What kind of retirement income are they going to have? So you can leave life insurance and trust for your children to provide a retirement income in case they don't have a pension or they don't have Social Security benefits that are as good as yours, because we don't know what's happening other than there's lots of changes in society that are impacting people's employment and the amount they can earn. We see automation increasing that's taking away jobs, globalization, and those trends are just going to continue. So people who have assets and who have saved can use life insurance as part of their estate plan to create that retirement income for their children that they enjoy that their children may not have themselves.
Yeah. What do you do for planning in advance of a potential long-term care expense?
There's three general approaches you can take to plan in advance. One is people can purchase traditional long-term care insurance. This is a product that's not very popular because it's expensive, and in general, people don't want to purchase a policy to pay for a place that they never want to go to. No one wants to go to the nursing home. So we're seeing traditional long-term care insurance it's never been utilized much, and it seems to be becoming less popular. A newer alternative that is a lot better, in my opinion, is what we call a hybrid long-term care policy or asset-based long-term care policy. The advantages to these policies are it's a tax-free way to structure part of your assets to stay at home and pay for care at home instead of having to move to a facility. But if you do have to go to a assisted living or nursing home, having this type of policy in place can provide substantial long-term care benefits to help pay for it, so you might not ever have to deplete your estate, or you might not ever have to worry about trying to qualify for Medicaid. Another good thing about these newer hybrid or asset-based policies is if you never use it, if you never need long-term care, your heirs get a death benefit, so you're not wasting the money like with the traditional policy. If people are interested in these things, unfortunately, there's not a lot of advisors who are knowledgeable about them. A lot of financial advisors are just concerned about structuring someone's assets in the stock market, and they just sort of assume you're going to be fine forever and you'll pass away at some point. They're not thinking about there can be a long period where someone needs long-term care. If I have a client who has all my clients who are planning ahead, we would like them to look into this. I refer them to an appropriate financial advisor who's knowledgeable about these policies.